What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw a bounce across the board as we're starting to break back above some resistance levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also, happy 4th of July weekend. The stock market will be closed on Monday, so enjoy the long weekend and enjoy the day off from trading on Monday. Alright, so today SPY was up 1.06% and we did break back over that resistance level at 380, so the bulls are still out there buying the dip. The first thing I want you to pay attention to with the price action is that we're not getting these elevators down any longer, and it does look like there's a little bit of seller exhaustion and there are people out there buying the dip. So since we're following price action, we can't ignore that the market does look like it's finding some sort of base near these support zones, and we're no longer getting that free fall price action that just slices through all support levels like they're not even there. So SPY breaking back over 380 is relatively bullish, but we still have a ton of resistance just above, which is going to be right around SPY 386 and 390. We still do have a bear trend, so we're not out of the woods just yet, but if SPY bulls can get a bullish breakout above 390 and then back over 394, it will look like a higher low followed by a higher high breakout, which means we should easily go up there to fill the gap at 401 before battling even more bears at that resistance. Breaking above that gap will likely trigger a short squeeze as the bears give up and retreat back to the previous high right around 418, and then bulls breaking above that will look like the bullish breakout that we need to get a sustainable bull rally. Now do remember, we also do have this gap to the downside at 369, and we know that gap is likely going to get filled even though we don't know exactly when. As long as we have the bear trend, do keep in mind it is very likely we fill down gaps before coming up to fill up gaps. So likely price action scenarios could be a retest of resistance, come down here and close the gap, and then possibly get some type of bullish rally, or we're just going to slice right down through this support at 370 and get down to that next price target at 350. So no matter which price action scenario that we go through, you need to have a trade plan and you need to know exactly what you're going to do no matter which scenario we get. So for that reason, on SPY, use this risk level at 380, because if you are wanting to get bullish, that is your nearest risk level, or you could use this previous low down here right around 373 to 376. Otherwise, you are waiting for that breakdown below this support zone at 370 and the gap fill at 369 to get a lot more bearish for that next leg lower at 350. So keep in mind, anytime you are trading against the trend, you need to be very cautious and do not get overly greedy on your trades. So if you are taking long trades off of this support, you will want to lock significant profits in if we do continue to bounce higher right around this resistance zone. Keep in mind, if we do get the bullish breakout, you can always enter again, but without price action confirmation, you want to be very careful being a bull at resistance. And even if you're a bear, you do want to get a lot less bearish near support levels, because as you can tell, we are starting to see buyers, and volatility does work in both directions. We can still get very volatile and very face-ripping bear market relief rallies, even if we are going to eventually roll over and make that next leg lower. So on SPY, watch that critical support down there at 370 and this critical resistance up here right around 390, and whichever level breaks first is likely going to lead to the very impulsive move that we're going to see in the stock market next. Remember, there's gaps in both directions, so be prepared for any direction, and while I do believe both of these gaps will get filled in the very near future, we cannot know for sure which gaps are going to fill first. On the NASDAQ 100 triple Qs, we were up 0.66%, and we also saw some dip buying in the triple Qs right around this previous gap close right around 277, even though the price action is still closing below resistance and below all the moving averages, and we still do have the bear trend. As you can tell on the triple Qs, time is running out on the clock and we are wedging down between support and our resistance trend line. So we are going to see the breakout in the very near future, and we're going to see where the next leg is coming in the triple Qs, whether that be the leg higher or the leg lower. The leg lower will take us to our downside price target on 258, but we will want confirmation that we're going down there by the breakdown below 269, because there is always the possibility of a double bottom, which means that we could bounce off of the previous low and not actually break down below it. So you're looking for very strong support in the triple Qs at 269, and if that level breaks, you're looking for the next leg lower at 258, and the bull breakout will be above 287 in the resistance trend line right around 290. And if we can get that bull breakout, it looks very likely that the bulls will push up there to close the gap right around 299. and there will be a lot of bears waiting at that resistance because that is also going to be the 50 EMA. So in the triple Qs, if price action can break above the 300 zone, that is going to trigger a short squeeze, which should take us back up to retest the high right around 315. So just a quick recap, critical support is all the way down here at 269. Below that, you're going for the next leg lower at 258. And the bull breakouts will be above 290, above the gap close at 299, and breaking out over the 50 EMA for a retest of 315. So in the very near future, we are either getting the bull breakout back to 315 or getting the bear breakdown back down to 258. So just be prepared for either scenario and then act accordingly when the price action gives you the go ahead. On the Dow Jones, we were up 0.98%, and the Dow Jones closed right on top of that resistance at 311. And the next resistance level to pay attention to is going to be right around 312 to 313, which is our 20 simple moving average. Above that, we should come all the way back up to our resistance trend line at 320. And above that, we'll break out and close the gap at 323 and likely start squeezing the bears. You can see there is a ton of resistance here right around 320. So that is not going to be an easy battle for the bulls as long as the bears have the advantage of the trend. So I continue to caution you not to get overly bullish in a bear market and not to get overly bullish in a strong downtrend. So while it is very likely that we come up here to the resistance zone, that would be a great place to just watch price action and wait for any confirmation before you get bullish at resistance. To the downside, the critical support will be the gap fill right around 299, the previous low at 297, because if we break below the previous low, we could make a brand new low all the way down there at 276. On the Russell 2000 IWM ETF, we were up 1.21%, and we did close back over the 5 EMA, and we did close back over that resistance at 170. So the next strong resistance will be up here at 175. Above 175, look for a retest of the 50 EMA at 180, and above that, look for the gap close at 183.5. If we get the bullish breakout above the resistance trend line, we will likely trigger a short squeeze to send the small caps all the way back up to about 191 to retest the highs, and above that will likely get a sustainable bull rally. To the downside, critical support will be at 170 and 164, and if we break below 164, the next leg lower will be down here at 156. On the Arkk ETF, we were up 3.36%, and it does look like we bounced off of the resistance trendline breakout, which is now acting as support, and we did come back up to resistance right around 42, and so far we cannot close above that level. So bullish breakouts will be above 42 and then getting back above 46 to 47, and 2 consecutive closes above 47 will look very bullish. Wait for price action to prove it because this is still a very strong bear market with downside price targets at 36.5 and 33.7. On the VIX, we were down nearly 7% today, and the VIX did break down below 27, and it's coming very close to the support trend line right around 25.7. And it's possible the VIX has been making higher lows and could bounce off of that support trend line. As long as the VIX is below 30, it is less likely we're getting the next leg lower, but as long as the VIX is above 24, it's still a very volatile market, so you still need to be very cautious and manage risk in a volatile market. The bull breakdown will be the VIX below 24, and the bear breakout will be the VIX back over 30, so watch those 2 critical levels in the VIX. On Bitcoin, we're currently down about 2.5%, trading around 19,500, and so far that support level at the previous low right around 19,000 is holding up, and the Bollinger Bands are starting to squeeze very tightly. This is good news for the Bitcoin bulls because it is going to reduce the amount of downside in Bitcoin, which could mean that we're due for a bounce in the short term. And if we do get the bounce breakout above 22,000, this will look like a double bottom off of 19,000. That should easily send Bitcoin back up to retest resistance right around 25,000, and above that, look for a retest of 28,000. If we break below support at 19,000, the next price target is all the way down there at $12,000, so you're getting very risk off on a break below 19K. On NVIDIA stock, we were down 4.2% as NVIDIA slices right down through that price target at 150, so that is definitely not the bottom in this stock as we are continuing to trend lower. The next likely targets if we continue to go lower than this would be down here at 130 and 125, but we are starting to see a lot of oversold conditions as we're breaking down through 150. So I would not be surprised in the slightest if we're due for a bounce in the short term, and we still do have a gap up here right around 159. So as you can tell, this is very bearish price action with a very strong bear trend. Even though we do have lots of gaps to fill to the upside, we don't know when this thing is going to bottom until we get some type of green candle reversal off of a support zone. So while this could be capitulation and we could be very close to a bottom, just be very cautious below 150 because the next price targets are much lower down here at 130 and 125. The upside resistance is still right around 156 and 161 and that 20 simple moving average at 167. On Tesla stock, we were up 1.24% and Tesla is holding that support at the gap close right around 663, but still failing to close above any of the moving averages and still in the bear trend. The next price target to the upside will be the gap fill right around 697 and that strong resistance is still there at $700. So we still need to give the bears all of the benefit of the doubt while Tesla is below $700 because it could be trying to get down here to retest the low at 620 or make that next leg lower at 571. You can get more bullish above $700, but you still have strong resistance at 743 and 775 as well as the 50 EMA at 757. On Apple stock, we were up 1.62% today, and Apple did have a bullish day, breaking back above 137 and closing back over the 20 simple moving average. So the next bullish breakout in Apple will be the close above 140 and 141. If Apple can break above the 140s, we should retest the 50 EMA at 145 to 146, and we'll still have strong resistance above that at 150. Don't forget, Apple still does have a gap to fill at 133, so this could still be a bounce to a lower high, a rejection at resistance, and then come down here and fill the gap. And if we do break down below the gap fill at 133, the next strong support is the retest of 130. And below 130, you're looking for the next leg lower at 120. On the financial sector, we were up 1.37%, and the financial sector is getting that confirmation of the bounce off of that support, and we're back over the 5 EMA, but we still do have a bear trend. But we also do have a gap to fill to the upside, so it is possible we could get this relief rally to go close that gap and test resistance. The industrials were up 0.87%, also bouncing like the financials back over the 5 EMA, but still in the bear trend and still below most of the moving averages. So while we could get a relief rally to close the gaps, you still need to be cautious if we get rejected from the 20 simple moving average. The healthcare sector was up 1.12%, closing back over the 50 EMA after what looks like a successful retest of the breakout, so this is looking very bullish in the healthcare sector. The energy sector was up 1.5% as the energy sector is still holding that support at $70, so you could be a bull off of that support, knowing that you need to exit if we break below it. We have a lot of gaps to fill to the upside, so if we get that confirmation of a breakout above about 77, you can get a lot more bullish. So jumping back over the S&P 500, this is a very tight consolidation zone and we're going to get a very large move once we get the breakout. So the breakout for the bears will be the close below 370 and the breakout for the bulls will be the breakout above about 390 to 394. Those are going to lead to very impulsive moves, whether it be to the upside or the downside. So know those critical breakout zones and then have a trade plan to act accordingly. And do be aware anything between 370 and 390 will likely be a volatile whipsaw until we get a clear breakout, and then we'll get a trend in the direction of the breakout. Be patient, use great risk management, and remember volatility does work in both directions, and even in bear markets you can still get very strong counter trend relief rallies. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.